Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities. Opinions and statements of guests not affiliated with EverAg are their own and do not reflect the views of EverAg. The accuracy of their statements cannot be guaranteed by EverAg.
Hello and welcome to another edition of the Grain Feed brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a lovely Thursday morning here. I'll just say it's lovely, okay? Joining me today from potentially lovely Kansas,
Confirmed.
Director of Feed Procurement, Mr. Jake Kingsley, and reporting from College Station, Texas, Professor of International Trade at Texas A&M, Dr. Luis Ribera. Team, how are we today?
Doing very well this morning, Jim. It is, in fact, lovely in Kansas.
That's great to hear. I thought it would be. Luis, how are things in College Station?
Doing great. Hot and dry, so good.
Hot and dry. That does sound like College Station, doesn't it? Hot and dry. Before we start rolling here into some markets, Luis, would you mind telling the viewers and listeners a bit about yourself?
Sure. First of all, thank you for having me. My name is Luis Ribera. I'm a professor and director for the Center of North American Studies at Texas A&M University. My area is international trade and trade policy. Happy to be here and looking forward to share some thoughts and views on how the agricultural markets are doing worldwide.
Awesome. Well, it's great to have you. Thank you very much for joining us. And we're looking forward to hearing from you. I think before we do, Paige, if you would kindly timestamp the broadcast. It is Thursday morning. It's about 10:15 Chicago time. We do have that WASDE report coming out on Monday. So if this program goes out on Friday, just remember when you get back from your weekend, I hope you enjoy it because Friday potential fireworks coming into Monday's WASDE and the USDA potentially giving us some yield revisions. We're not going to call that just yet. We'll get to it here in a little bit. But in the meantime, markets are trying to, let's say, reposition themselves ahead of the weekend and potentially that report. We do have December corn futures are now back below $4 per bushel, just a smidgen, but we are trading just below at $3.99 this morning. So that very psychologically impactful $4 per bushel on December corn. We have edged our way lower just slightly this morning in Chicago. We have Novi beans edging ever closer to $10. We're at about $10.12 per bushel this morning. And then soybean meal, perhaps not as stubborn little byproduct this morning, edging its way back towards $3.15, $3.15 for December meal futures. We hit it on the nose earlier. We're about $3.17 at the moment, so still down about $1 or so on the day. So watching that stubborn little protein as we move into that Monday WASDE. But lots happening here in the marketplace, and I think from a broader perspective and a bigger macro picture, we've seen some volatility here just in the world over the last week or so. I think kicking off of the end of last week, we saw U.S. equities take a pretty big nosedive into Friday and Monday, trying to maybe halt that a little bit as we move into Tuesday, Wednesday, Thursday. We saw corn react a little bit as well with a brief rally on Friday, Monday, and now easing its way back ahead of this WASDE report. There's been a lot happening in the global macro markets. I think the Japanese potentially raising interest rates just a smidgen had an impact on what's happening overall in terms of managed money, maybe liquidating some of their equity positions, but also eyeing what they should be doing in the commodity space, and also then having an impact on what the U.S. dollar is doing, because there's already talk of maybe bigger interest rate cuts here come September. Why is this all important? Well, it impacts our global trade and our ability out of the U.S. to export our commodities and how that ultimately then impacts feed and how expensive or inexpensive it might be to feed those little cows and piggies. So, Luis, if you wouldn't mind helping us dive in to that international trade picture and what you've been seeing lately from your perspective.
Sure. Well, as you mentioned, the markets have been reacting to this sell off and the stock market going down. Usually that brings a lot of volatility. And especially you mentioned Japan, there's a lot of issues there. So what that boils down to is, in general terms, will be the dollar getting a little bit stronger because it's a safe haven. Whenever there's a volatility or whatever is an issue worldwide, the dollar is still king, and they go after the dollars. So try to reduce the risk there. It's important to understand that about half of the US dollar are outside of the US, and it's just how countries try to protect themselves. As you know, money, one of the main attributes of money or usage of money, just so you can store value. And when there's volatility, you try to keep the dollar so you can hold as much value as you can. Of course, that makes the dollar stronger, and that makes it harder for us to export our products. And we're a major agricultural exporter. So that makes it harder for our products to be competitive worldwide. And we've seen that, in general, over many, many years, we've had a trade surplus in agriculture. We export more than we import. But over the last 2 or 3 years, that flipped. And now we've seen that expectation is that trade deficit is going to keep growing and growing. Is that because of the strong dollar? Well, not necessarily, but it impacts our exports. But the other thing is that we import a lot, and we're the largest agricultural importer. And what we import is not as much raw products. They're more processed and consumer oriented. We import quite a bit of fruits and vegetables from our partner down south in Mexico and also Central America. So when you look at this trade deficit, when you look at the value, yes, we do have a trade deficit. But when you look at volume, quantity, we have a trade surplus by 2 or 3 times more. So basically, in terms of volume, we export more quantity than we import by 2 to 3 times. And the reason, again, the things that we export are more raw products, and they're more grains and meats and things like that, but we import more higher value like fruits and vegetables. The expectation, again, is that this trade deficit in terms of value is going to keep growing. Right now, we're just looking at the numbers from USDA. Year over year, from January to June, we have a 2% decrease in the value of agricultural exports, while we have about a 6% increase in the value of our agricultural imports. Again, in terms of value, we're importing more than we're exporting. Some of that had to be with the strong dollars, but also is that we are a large country. Remember, we have about 330 million people in this country. We have about 25% of the whole world money. The world GDP, we have about 24, 25%. So we have a lot of people with a large purchasing power. And the other thing that is important to point out is the amount of money that we spend on food in this country is the lowest in the world. On food purchase at home, consume at home, we spend a little bit over 7% in our disposable income on food. Compared to other countries, let's say Canada is about 10, 11%, compared to Mexico, about 15%, compared to Brazil, about 20%, compared to China, for example, is about 25%. So we do spend our food in these countries is the most affordable in the world in terms of the percentage of our disposable income. So why is it that we have this trade deficit? Well, we like our fruits and vegetables, and we're very dependent on them. We want it year round, and we want a good quality, and we don't want to wait for things to be in season. So we import quite a bit.
So we import quite a bit, and the export goods that you mentioned, like you said, Luis, they are primarily those raw products. And like for our world, that very much for our focus then is, of course, corn, wheat, soybeans. And we have historically have been, I feel like, the player in terms of exporting those products. But, we've seen things shift over the past 3, 5, 10 years in terms of the way South America has become such an important player in the export space, especially fulfilling the needs of China and other participants across the globe. And you're tracking, the US dollar. You mentioned that in times of volatility, the US dollar tends to strengthen because, like you said, dollar's king, right? So people turn to the US, but they turn to the currency and US based investments as well as the, safe space. I think the fascinating part of the last week or so is that, between Friday and Monday's trade, you saw the value of the US dollar take a pretty big ding, right? The US dollar pulled back a decent amount. You saw other currencies then elevate against it. Still in the grand scheme of things, though, right, Luis, the US dollar remains elevated. It has been largely elevated now for several years, especially as our interest rates ran up. People turned back to that dollar to invest. But to see the dollar pull back a little bit, to see talk of we are now potentially reducing interest rates as early as September, perhaps. There's already debate over what size of a cut that will be of 25 to 50 basis points and what that looks like. Do you have any guidance, Luis, in terms of, both monetary policy and that's impact on the currency and our export abilities in the near future here, but then also maybe even from fiscal policy and, we have a volatile election cycle here coming up, right? And just keeping things just in that guidance of the Chinese and other players in the international space wondering who ultimately takes not just the White House, but also U.S. Congress and what trade policy looks like. So any crystal ball down there in College Station over the next handful of months?
Boy, that's a very loaded question. But no, I don't have a crystal ball. I just give you my thoughts on it. And one of the issues is you're trying to reduce interest rate to try to kick off the economy to but at the same time you're still printing money and you're running a big deficit in this country, and that deficit keeps growing and growing and growing. I mentioned that the dollar is a safe haven, historically, but at the same time, when you look at other countries looking at our deficit, our fiscal deficit here, it is a major concern. And there's no clear message of when is there going to be a turning point. Eventually when you print so much money, and we're paying the price for that because of, high inflation is still here. And it looks like it's very sticky. It's going to stay for a little while. We're running a deficit. That's just a big no-no, and it keeps growing. And there's no clear message what we're going to do. So there's still, a volatility into what's going on. Now, how are we doing compared to other countries? Probably better, but there's still a lot of risk. And you mentioned about the election year. Yes, if the same administration stayed in office, expectation will be that there will be more of the same, kind of like what President Biden is doing. The markets react to that. And we're talking about, again, not necessarily that it's going to happen, but if we assume that it's going to be more of the same, then the deficit is going to keep growing. And there's no clear message from the Fed, what's going to happen. We don't know when, if they're going to reduce interest rate. They don't want to reduce it too quickly because then inflation is going to kick back up. We try to keep that one as controlled as possible. We're way, way off the 2% target that they like to be. So it's sort of like keeping track of what your right and your left hand are doing, trying to move this side, but then, what are you going to do with the other hand? It's really hard. Now, in terms of if it turns to the Republican side, they're more market oriented. The markets usually like that. I foresee that there's going to be less regulation for fossil fuels and trying to less regulation, also EPA regulations for agriculture. I think that's a positive thing. But in terms of trade, it's also, a lot of volatility there. With the Trump administration, we renegotiated NAFTA. When you look at NAFTA numbers, they're looking pretty good. Now, is USMCA agreement, is it better? Yes, it's an updated agreement. It was a 28, almost 30-year-old agreement. So USMCA, yes, it is better to address some things that they were not dealing with, 28, 30 years ago. But was it worth all the volatility in the markets? I don't know. It remains to be seen. But we have it. So what else is going to happen? What you mentioned about China? What are they going to do? There's a big dip on what China was buying from us from 2020, 2021. Are we going to see more of that? Well, we'll see. The thing is that China now has a lot of options, especially in South America. And they really like Brazil. And when you look at soybeans, when you look at corn, Brazil now is the largest exporter of soybeans in the world. And then it's giving us a run for our money for corn. Those are the things that we have to keep an eye on. The other thing that you have to look in Brazil, and I've been there several times, it's a beautiful country, but they're going to have issues with infrastructure. They're having already issues with infrastructure in terms of silage, storage in roads, and just to be able to move their agricultural production. Cotton has been growing quite a bit as well. So Brazil is something that we need to keep an eye on because While I was there, the last time I was there was in 2018. The numbers that I was seeing from their government, they could double their cropland without chopping a single tree. And just to put sizes there, Brazil is about the size of the U.S., continental U.S. If they can double their crop acreage without chopping a single tree and just by managing their pasture land a lot better, that's, scary for U.S., And one more thing about that is that Brazil, they're being blessed with a year they can produce 2 crops. And some say they can even do more. They're trying 3 crops and livestock on the same area. Their best combination right now is soybeans followed by corn. And when you look at yields for soybean, they're very comparable to the U.S. The corn is usually lower because it's the second crop. But they're trying now pasture land on top of, when you get soybeans, you harvest your soybeans and you plant corn or sorghum. On top of that, they put a grass, brachiaria grass. And then when they harvest their corn, the brachiaria is coming out and they put cattle on it. So when you have that, it's like, wow, and they can do it year round. And they already have about 20 million acres of that system. So again, it's something that we need to keep an eye on.
Yeah, and I think your points on China then having options too, I think are huge for, what Jake and I are focusing on here is what does export demand ultimately do to our domestic pricing? If you look back to when President Trump and his administration ultimately kicked off a trade war with China when they took office, we saw the markets here take a nosedive over a year or so remaining under pressure. But then, when that trade deal kicked in, you go back into that 2019, 2020, exports started to ramp back up to them. But times have changed. They've clearly have pivoted. The Brazilians, like you said, Luis, have made themselves arguably the go-to. I mean, they've taken our model and have said, that's a good model. I like that. How do we do it? We expand acreage. We figure out a way to produce multiple crops. We figure out a way to improve infrastructure, if possible, not as quickly as they'd like, but they're working on it. And to be that huge export player to the market when people maybe want to step away from always depending on the U.S. crop. But you also brought up the trade agreements here in North America. Mexico remains a huge partner for us in terms of their willingness to procure American corn. And then you noted also the volatility of, depending on the administration, what happens with the EPA. How does that impact ethanol production and demand here in the United States? So there's a lot to look at in terms of how this election cycle, but also how the global macro economy is going to impact what we feed our animals here in the U.S. and how we get that done. Jake, let's turn her over to you then and give you a minute or two here. Yes, there's been a lot of volatility in the marketplace in terms of futures, right? And of course, looking at the macro, we touched on that too. But have we seen the same from a basis standpoint? Is the same amount of choppiness being experienced on the physical side of things, or is all things fairly calm as we head into WASD on Monday?
Yeah, we haven't had quite as much excitement on the basis front yet, but it feels like things could be changing a little bit. I think with the macro markets spooking folks as much as they did at the end of last week and the start of this week, and now getting into August and Midwest producers realizing that they're probably not going to get the pop in futures markets that they were hoping for. And they've got grain in the bins, and they've got what appears to be a very large crop coming at them here in the next 60 days. We saw quite a bit of activity on the grain selling front to start this week. Folks are clearing out bins, getting ready for harvest, kind of as we had expected they would do. We weren't sure if they would do it now or if they'd wait until they got to harvest and just kind of flow grain off the truck straight to the elevator, how that was going to work. But it appears that at least a chunk of folks are moving now. And we haven't seen that translate to a breakdown in basis numbers yet, particularly at the destination end of the rail lines. But for the first time in a while, the conversations with feed sellers has gone from, here's my number and that's the best I can do today, to, hey, give me a bid. If it's a firm bid on a set number of tons for a set time period, I'm not sure that I can get it done today, but I feel like my chances are better than they have been at any time in the recent past. So something has changed there. The front end of the rail line now maybe has a little bit of a book on that they're willing to turn loose of. And I think this goes for both corn and protein. Canola is probably still the outlier with all the concerns around continued Chinese purchasing of that product. But more importantly, some of the strike potential at the railroads and some of the processors up there, those situations still seem to be gridlocked and headed towards strikes here in the next 30, 45 days, which would be chaotic to say the least if we seize up transportation right at our busiest shipping period of the year. So with that, we're still encouraging folks to take advantage of prices while futures are down here and get something done. If you haven't cleaned up your old crop, particularly your protein, it's probably time to go ahead and get your August and September protein needs purchased so that if we do see some sort of a strike, shut down shipments, even for a day or two, that creates a pretty hectic situation logistically for several weeks just to unwind it and make sure products coming in. So you want to have a contract on, you want to get inventories full and be prepared for that. Do take some proactive measures there. But then in the new crop window, again, these futures values and the overall cash values, even if your basis isn't where we think it could get based on historical perspective and current fundamentals, we've seen over the last couple of weeks, if you're waiting on 20, 30, 40 cents in corn basis per bushel, or you're waiting on $10 or $20 a ton in protein, that could get eaten up in a matter of days on a futures rally. So while we're back down here again, take advantage of something there. One other thing that we've been talking about quite a bit was the cotton seed market. And we saw our first little hint that thing might try to move the direction we've been talking here. Saw some stuff out west trade closer to the 350-ish type of mark that we've been shooting for. A lot of folks are still hanging in there at 360, 370, 380, but crop conditions are good both in the Southeast and in the Texas Panhandle. All other commodities are still under pretty heavy pressure. I think we can afford to continue to be aggressive on our price there for a little while longer.
Okay, excellent. Thank you, Jake. Yeah, I mean, I think overall, you've handled the cottonseed pricing impeccably over the last 6 to 12 months. So you've really had your ear to the ground there across the country. So you've done an amazing job on that front. And I think in regards to the storyline on the Canadian rail strikes, very important to keep our eyes on that. Like you said, very convenient time to potentially shut down a very significant rail system for us here in the U.S., right? I mean, I know it's happening to the neighbors to the north, but it does have an impact on what we're trying to do here. And not just for those feeding canola, it's going to impact basis, I think, across the U.S. potentially if that thing starts to get out of hand. So we'll keep an eye on that. We'll, of course, keep an eye on the WASDE report on Monday as we head into the weekend. Just remember, keep an eye on that thing. It can cause a little bit of excitement. All eyes on yields. Jake, just real quick, just give me a number, just a bold prediction. Monday, what are we looking at Monday?
We're going to leave it totally unchanged. They are going to leave it unchanged.
Totally unchanged. That's a page out of my book, Jake. You've been listening to me too much.
Well, on the phone with you all day long.
Yeah.
I think they call it brainwashing.
I know. It's brutal, man. Yeah, we will see. I think it's going to be, all eyes will be on yields. I think we got to be careful to see if they change any of the figures around from the demand side too. So we're going to keep a sharp eye on that. But excellent work today, both gentlemen. Thanks for being here with us. Luis, really appreciate your insights. Thank you so much for taking the time to be on our show. Thank you very much, sir.
Sure, anytime.
Awesome. And we'd also like to thank Corey and the Everag Insights crew for their support. Thank you to Paige and Lexi for their production magic. Thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.